Hi everyone, hope you're all doing well, and today we're going to talk about what is currently going on in the stock market. And what I'm going to say today is I'm not actually going to mention any individual stocks, but I guess you can think about the stocks that I am talking about. And just to give you a little bit more detail, if you're still struggling with that, is probably the growth stocks that we're talking about right now. A lot of the growth stocks in the stock market are dipping at the moment, and today is a bit of a pep talk, is to get back in the right mindset. And I definitely think for a few people, especially in these situations, it is really useful for a video like this where it kind of helps your mindset and think about where we're at and what situation that we're currently in. So yeah, hopefully this video is useful for you. If it is useful, just smash that like button up, subscribe if you're new, that'd be absolutely amazing. Now, what's happened pretty much on the growth stock scene over the course of the last 12 months is we've seen a lot of growth stocks go up and up and up and up and up, probably all the way to February and March. Now recently, in the last 2 months, a lot of growth stocks have reversed, and a lot of growth stocks are probably sitting down at about a 50% drop now. You name it, most of the growth stocks have had a bit of a dip. It could be stocks that you currently own, or you're watching and thinking about buying, but a lot of growth stocks have dropped a lot, and like I say, some of them 50%. This situation has been a total change from what we've had, because we've literally had from March 2020 a bull market, and stocks have just gone up in a bull market. And in that bull market, everything seems easy. Investing seems easy. It seems like, oh, I should have done this earlier. I should have bought more. Why didn't I invest in more money? And in a bull market, everyone looks a genius. The big reversal that we get is when the stock market stops going up in a bull market and we hit a bear market, or we have a stock market go down. And that's what we're currently having. And in that situation, you can now see everyone looks a genius in a bull market, but when we get a bear market, you can actually see who's still swimming. And that's what we have going on right now. And this channel isn't, like a pump and dump. It's not a fake channel. It is built on long-term investing and getting the right mindset, having no emotion and buying great companies. And this isn't a channel that I'm not a guy that, does stock market videos, and when everything goes up, I'm there going, oh, I told you to buy this, look how much this has gone up. And then when the stock market goes down, I stop talking about my stocks. I hide behind, not uploading videos or anything like that. I'm still here every day uploading a video saying this is what I'm doing, having these videos with you. And through the bull markets, I'm here all the time. Through the bear markets, I'm here all the time doing videos. And this is the situation now where we've had a reverse. Like I say, everyone in the stock market, when it's going up and up, it looks easy. Everyone's making money. Everyone's a genius. Now, these are the times where we're seeing the dips in the share price. Times start to get a little bit tougher. And when times start to get a lot tougher in the stock market, what you start to see is two things start to be challenged. The two things that are challenged are patience, because patience is challenged because you start questioning whether or not this is a good investment. You start getting fed up because all you see is your stock going down. And the one thing as well that can really hold you back in the stock market is emotion. Emotion is definitely natural, and seeing your investment going down week after week, you start looking at a screen and see your stock going down more and more and more. There's a point where your emotion starts kicking in and going, is this actually a good thing? Should I be running out of it, leaving here? And the emotions can switch so quickly from a time where 3 months ago, everyone has the emotion of the stock market's amazing, let's buy risky stocks. There's a reason why all them risky stocks have disappeared over the last kind of few months and definitely the last few weeks. And the emotion changes from everyone that thinks everything's easy money. And then we have the emotion where people are like, oh, I'm not sure now. Maybe I should sell that. Maybe I should leave the stock market. I don't know if that company's a good company anymore. Maybe I should stop buying this company. What else should I buy instead of this company? This company is a bad company. And all these emotions start coming. And this is the time where it tests you as a long-term investor, if you're actually a long-term investor. And it tests you emotionally, because emotionally, as a long-term investor, you have to disconnect from a lot of your stocks. Because like I always say, when you invest into a stock, it is literally a 50-50. Whether the stock you buy in the short term goes up or down. In a bull market, the chances are when you first buy a company, it will start going up in a bull market. If you start buying a company and you're in a bear market, the good chances the other side of the 50-50 comes in and you start going down. And that really does test you as if you have done your research, if you've got confidence to carry on holding that company when you're going down, because that will definitely start kicking in. If you have done your research, you'll be a lot more confident to hold that company, to keep buying that company. And like I say, definitely, I think that definitely comes with a little bit more experience as well, is emotion, disconnecting from your investments and just, leave it to one side. I'm not investing it for where it's going to be in the next week, the next 20 days, the next 40 days, the next 80 days. You're thinking further down the line where it's going to be, and you're waiting for the game plan to kick in place, the revenue to kick back in place, and you'll eventually see that share price come back. And yeah, today is definitely a video where I wasn't going to make a video, but after looking at the comments on yesterday's video, I definitely feel like this pep talk is needed, and it's definitely a time where we see who's going to sink or who's going to swim right now. And like I say, it's definitely testing them emotions. So first of all, the big thing I'm going to say is the bears. The bears are definitely out in force. When we're in a bull market, the bears disappear off the scene. You won't see them. And I've noticed this even in the comments of my own videos. The bears are starting to come out of the scene right now because the stock market's going down. You get the bears that are coming out going, I told you that stock was rubbish, it's going down. You get the people going, oh, the stock market's only going to go down further from here. And all these start coming out. I've seen it on comments, even on my channel. And people are like saying, oh, this stock's rubbish, it just keeps going down and down. Now, it's easy to say that because when we hit a bear market, the bear market goes down faster than a bull market. It can take quite a few percent for a bull market to go up and up and up, a few days for it to go up and up, even a few months, a few years. We hit a bear market, it can go down so quick in a month or 2 months. And because of that, the bears come out and start showing off. But I tell you something, when we have this cycle, and trust me, a cycle will happen, and some of the stocks at the moment, they're absolutely beaten down, just like many times before. The cycle will change, and people will come back into the growth stocks. People will realise that some of these growth stocks are absolutely amazing. And my channel is definitely what the YouTube is it attracts a lot more younger investors for sure. And I think that a lot of younger investors as well watch my channel. Don't get me wrong, by younger investors I don't mean people that are 18 to 20. I think young investors are from 18 and still far off retirement, still 40, 50. Young investors covers a big category in the stock market, and people that are young investors get attracted to the YouTube scene because they're a bit younger. They look for growth stocks, and that's what they invest in. And I invest because I'm young, quite young as well. I invest in a lot of growth stocks, and the cycle at some point will come back for these growth stocks, just like how value plays and dividend plays were beaten down, for a few months ago. They're starting to come back now. And sooner or later, people realise, okay, these valuations are peaked out, we'll go back into growth stocks, and the cycle will start coming around. But the bears are definitely out in force, and that's the thing, they all kind of start shouting now, but trust me, in a few months' time, when the cycle happens again, they will disappear off the scene. And it just seems so loud right now, and they might be a few people that start affecting your emotions because they're out there posting so many negative things about this company, and because it doesn't help that they're down and you're already thinking, oh, I'm not sure on this investment, that you start seeing other people going, I told you it's rubbish, you shouldn't have invested into it. Trust me, I've come across a lot of bears in my investing time, through especially doing YouTube as well. Everything that I talk about, all the investments I make, I'm transparent. I've put every investment I've ever made on this YouTube channel for the last 5 years. Well, I've put my last 12 months on this channel, and then all you guys that have been here for longer than a year will know that I have the JK Investing old channel that I had, where I have another 4 years of investing on there and 4 years of YouTube videos. And through my time, I've had so many people come onto stocks that I bought when they've gone down and gone, oh, it's a rubbish company, I told you not to buy it. Oh, what does that guy know? He stood in front of a stupid whiteboard. He can't even have a t-shirt that fits him or something. Them sort of things. I've got a thick skin. It don't bother me. But I know that in the long term, good companies will come back. And I can name that on Pinterest. I've had people on Pinterest that say, it's a bad company. It goes up 300%. Few years later, when the stock starts going up, for some reason their comments get deleted. It was the same on Card Factory. Card Factory had the same comments 6 months ago. Greggs, before November, same on there. Hollywood Bowl, same on there. Boohoo, same on there. Tesla, same on there. GWPH Pharmaceuticals, some of you guys might not know that one. That's a stock from a few years ago. Same on there. The comments all delete on the videos, because this is kind of just going a little bit off topic, but I'm someone that's been through the stock market and been through a lot of cycles where the stock market goes down, buy the dip, make the money. And I've seen it, and this is a time where everyone kind of puts you under pressure, and you've just got, if you have belief in your company and your company will perform, it will come back in share price. And that's just going to my point of view, is like, at the moment there's a lot of bears out, and even from my point of view, you know, I've always been transparent on the channel, and if you guys watch my channel, you'll know there's only one investment I've ever sold out at a loss, which was Cineworld, and that stock even still went up, and I should have still kept the company. Everything else, you know, on this channel we've made hundreds of positive gains on stocks. There's only one time where I've got it wrong, and I know who I'd back in that situation, you know. And it just goes down to the bears. The bears are all out right now, and I've come across them so many times, and I'll tell you who I would back, you know, and who I think would come out at the top. But we're just going to break it down into what happens in the cycle right now. This is the mindset that's currently going on in the stock market. So a few months ago, what happened in this cycle is we had growth stocks here. The growth stocks went up to this valuation up here. And people thought, oh, that's a great investment. I should have probably bought more. And they're really happy with themselves. And then what happens from here is it goes up even more. It shoots up absolutely huge. And people at that sort of point here are thinking, some people that still have a lot of emotion connected to stocks will see that jump from here up to here very quickly. And FOMO starts kicking in. And people actually start considering buying a lot higher than their average. And they think, oh, I should have bought more here. And then it keeps going up and go, oh, it's never going to come down this. I'm going to buy, you know, way higher than my average. And then what happens is the stock peaks out. And it comes down and people think, oh, you know, it has a little bit of dip, I'll average in here. And then it drops down again. And it's back down at prices that they basically started buying in at. And people start considering, oh, you know, it's dropped a lot. This has to be the bottom because this is where I bought. I'm going to buy here. And then it even drops lower than that point where they started investing. And then people start to question themselves and go, oh, I don't know if this company's really good. It's below my average now. Where all this time through here, people have been FOMOing, and then it's a big test of your emotion. And it's a big test of you back here. If you said, you know, 6 months time you could buy back in at a lower price, at here you would have said, yeah, I'll snap my hand off. But when it actually comes around, it's the big test of your emotion and if you actually have like the confidence in your company. And then from there, you know, this cycle happens again and people will come back in and it goes back up again. And this is the big cycle test. It just makes me laugh that it does really test your emotion. And I've seen a few people do this where, you know, the whole cycle of, I wish I bought more. Okay, I can't buy it anymore. I'm going to FOMO. I buy it. Then it goes down and they have the chance to buy and then it goes down even lower and they think, oh, it can't go any lower than this. And it goes down even more and people are like, oh, I'm not sure now. And that's the real big test of like, this is the time where you can get your average really low if you believe in the company and you have a situation where you could really benefit in the next 2 to 5 years from averaging in at these prices. But you have to disconnect your emotions. And you have to have a lot of belief in your company. If you have a lot of belief in your company, you'll be really happy you did that. And let's just go back to March 2021, because this is one that most people that are watching this channel probably have been through this situation. The thing is that most people in this situation got started in this time, and what they did is they bought pretty much in March, and all they saw was the market go like that. So they could kind of see, they witnessed buying the dip and seeing the rewards. But at this point they realised here, they were a bit nervous, they were unsure. But when we got to this point, everyone thought, you know what, I should have invested more money. But for the guys that have been on the other side of the March dip, you would have seen it took a lot of bottle for you to be going down these points where if you were on the other side, if you were buying stocks pre-March, you will know how much you were down on stocks. I was down on Carnival 80% at that point. You know, it takes a lot of bottle. And you guys that have been in the stock market prior to March 2021, before the pre-pandemic happened, and you got to March time and stocks were going down and down, they went down pretty low and very fast. And you guys here, you have already seen the rewards of buying on the dip and buying great companies. Because if you were buying and averaging so heavy on this dip and just kept going, and had the confidence, you've done the full cycle. You've had the bottle. You know the benefits of having no emotion and just buying and buying great companies. Because you've been through it all and you've seen it on the other side. And there's two different kind of investors that are going on here. You've got some investors that have the experience of having bottle and buying great companies because you've been through it all going down and then experienced the upside. Whereas some people in the stock market that are more recent, they probably bought in here and they kind of only had the benefit of thinking, oh, I should have bought more and had more confidence on it. So there's two situations there that I think are going on, and I think for the audience that are watching this, you might be in a different boat. I think I would say like half the people watching this probably been in the situation where they've seen the benefits of having bottle and having no emotion and just buying. But some people have got the rewards from buying on the dip, but just haven't been through a situation yet where it's a big test on your emotions for sure. And that we had that in March 2021. And I think one of the big things that are going on right now is this here. Don't fear a mistake. I've seen, I think a few people are actually worried of making a mistake, and they shouldn't really. They shouldn't really fear a mistake. Sometimes you might make a mistake in the stock market, but the aim is to make more money or more better returns than what you make mistakes really. And someday you are going to get you're going to get some wrong, for sure. But don't fear a mistake because as long as if you do make one mistake, it's okay. It's definitely a game of making more positive returns than more negative returns. And, you only need one home run to cover a lot of losses. So let's just say I split between 5 stocks here. Sorry, I'm rushing this a bit, so the writing's even worse than normal. 5 stocks here, 5,000 in it. Let's say this stock here, we lose, I'm going to switch to my red pen. This stock here, let's say it goes down 50%. You actually lose, you go down to 2,500 there. One stock. I'll put an extra over there. 2,500. But if you make 100% on this company, that already covers your one loss here and more profit. And if you can do another 100%, I'm right sideways again. If you could do another 100% here, and on this one, and this one, even if you make one loss here, one gain can cover that, and everything else is amazing profit, and that's off 100%, and that's some benefits you can get for buying on a dip. Let's not forget, let's say these all do 100%, but then you hit the complete home run, and that makes up 500% return. You have one stock that covers the loss and more. You got other two companies that make nice profit, and this one here, 500% return on 5,000 is a crazy return, and that's your absolute home run. And sometimes people are worried about making a mistake. And don't worry if you pick a stock right now and it doesn't work out for you, because the aim is just to make other investments. You are probably at some point you will make a mistake in the stock market. It is going to happen. But the thing is, you only need one. Even if you have one mistake, you will get better at it. The more you do it, you get better at it. But if you make one mistake and you make 4 good investments, that one investment covers it. It's same with this one here. If you had 2, try not to have 2 bad picks out of 5 companies. If you had 2 bad picks, you'd still cover it there and still make loads of money. The aim is just to make more bigger returns, and the stock market favours you. If you lose 50%, there's a lot more upside on the way up. On the upside on the way up, you got 100%, 200%, 300%, 400%. The upside can easily cover your losses, and don't be scared of a mistake. But obviously, the main aim is, try and make limited mistakes. That's always a big thing. But if you're looking for these growth companies right now, trust me, a lot of these growth companies, if you pick great growth companies that are sold off right now, you'll be getting the rewards in a few months' time, a few years' time. And like I say, even if you do make one mistake in 5 companies you buy, you only need the other 4 to work out for you. You only need one of them to be an absolute home run, and it covers them all. And right now, there's some great growth companies on sale. And like I said, even if you get one wrong, don't worry about it. the aim is to get more right than you're wrong. And if you're doing your full research, you have confidence in it, and even if one of them goes wrong, the other ones will do fantastic and you'll make great money. And that's the thing right now. You've just got to go through the growth companies, do your research, have your confidence. And if you do your research and you have the confidence and that company performs and the revenue performs, the profit performs, people will come back to it and you will make your money. And always remember, there's a lot more upside than downside. And yeah, that's the video for today anyway. I thought I'd talk about this and a bit of a pep talk on the current situation, because there's a lot of dips in the stock market, especially on the growth side as the cycle carries on. And just a few examples there of things that are currently going on in the stock market, and hopefully it was useful for you anyway. But I hope you enjoyed it. If you could, smash the like button if you are new, subscribe. If you do want to join my private stock market group, there's a link to my Patreon. We did an hour's private live stream on there the other day, and one of the stocks we talked about was Huya, even though I said I'm going to mention these stocks today, but we did talk about that one on the private live stream. If you do want to start stock market investing, it is a good time right now to buy a few companies on dip. There's some links to some brokers in the description, and you can open up an account from there. Some of them also have free shares as well. But that's the video for today, guys. I hope you did enjoy it anyway, and I'll see you on the next video.